All right, good morning. It is Thursday, October 30th. Welcome back. I'm Zach Howard. Let's look at a morning market update from where we're to after the central banks of both Canada and US met yesterday. No real surprise from what we've seen out of the policy response. As I mentioned in my previous videos, the market already knows, and usually the central bank pretends they are the ones acting, but that is not how it works. They follow the path of policy that is already via the market, the bond yields. My home country, of course, this was well played out. This has been telegraphed to the market. There's no surprises with the central planners, central banks. They don't want to surprise the apple cart that is markets. And that central bank cut yesterday in Canada. No surprise if anyone's paying attention, particularly if you're looking at the lens of the short duration Canada government bond yields. Quarter point cut down to 2.25 now. But the bigger takeaways here is, why do people even pay attention to what these guys had to talk about? Mostly guys, all white guys in suits. Their forecasts are always wrong. They are always wrong. If they were coaching a sports team, if they were CEO of an actual company that had to do profitability, if there were anything responsibility to the laws of nature or math, they would be fired. Not so much when you're a central banker. Their core inflation metrics were sticky around 3%, yet the bank is cutting to 2.25 in the backdrop of their forecasters saying 2025 growth now 1.2%. That is nominal growth. That's not even that real growth. So negative real growth in Canada for far out as the eye can see. 2026 1.1, and then of course we just pencil in another 1.6 higher in 2027. But when you have inflation, real inflation is way more than the government stated 3% round number thereabouts. Even if you said that as face value, you got growth half of that. So you got negative growth as a relevant gauge to inflation. That equals stagflation. Financial repression is in Canada. That's why gold has been ripping. That's why the stock market in Canada has been ripping. That's why commodities, sans oil, have been ripping and will continue to be. Like, this is just starting for the fiscal spending that the Canadian government is now going to enact. They are spending money like they are in war, like they are in a COVID emergency as a percentage of their budget. Similar in the US. The US government has really taken a baton from Wall Street, from the corporate level, from the private sector, and putting all the debt to support the economy through fiscal spending, 6, 7, 8% of GDP the last couple of years, and continuously here now, even with the new government. They put it on the balance sheet of the federal government, supported by the central bank. They're kind of joined at the hip, pretending they're not, but they are. And rates had to continue to come down to keep that math going. A quarter point cut in the US, which also was no surprise when you look at the bond yield, the short duration US 2-year treasury, etc. The 3-month and the US 10-year now widened to 22 basis points. This is widened as it's been in some time in the US. But the bigger takeaway here is what also was talking about how bank reserves were getting low in the US. The repo facility keeps getting drawn down, and we're looking at ending quantitative tightening here in December 1st, where they're not going to be reinvesting those funds when those bonds roll off, particularly the shorter duration ones. Quantitative easing picks up again. All roads lead to devaluation of the currencies in both nations, Canada and the US, and ultimately the people, myself, you, if you're Canadian, if you're US, and the currencies are the release valve. The 51st state idea, is it really a joke? Like, at what point, if this is actually, you're looking through the game of a sports team or a business taking over a weaker player, when does that come to be? Arguably, we would have a much better fiscal situation immediately if we adopted the 51st state or whatever came with that. I'm not going to get into the moral and the emotional side, but just from a math standpoint, our currency appreciates 35 to 40% overnight. You get appreciation in your asset values because of that currency. What's so bad about that? But the difference in Canada versus the US, the household debt in Canada is immense. Compared to the US, almost 100%, compared to 68 in the US, highest of the G7. interest rate cut is going to benefit consumers who have floating rate mortgages or their operating lines of credit, etc. Here now in Canada, with that floating rate coming down with the Bank of Canada, roughly 60% of all Canadian mortgages on renewals. Unlike the US, we don't have long duration mortgages in the next 18 months. So this has always been the play card. They needed to get that easing out. And I would suggest there's probably at least another quarter point cut coming in the Central Bank of Canada by the end of the year, and potentially another one then in 2026 to see how poor the fiscal situation gets. A lot of that's going to go back and forth to tariffs. The US is still the global hub of capital. Look at this chart here from Goldman Sachs of how much money in financial assets, whether that is through corporate debt in global bonds, government bonds, or global equities, is in the US. And as we see yesterday, the poster child for it all, Mr. NVIDIA hits that beautiful round number of $5 trillion in fiat market cap in US dollars, the biggest of all time. 17% now, approximately, of US GDP in one company. As I've talked about for a while, NVIDIA already larger than every single company in Canada combined. Crazy. Well, if you want to look at the regular old-fashioned metrics of the company, which doesn't give you any value when you're looking at this bubble that keeps inflating, it wouldn't be a bubble unless there was real use cases for their technology, their chips, their services. People are buying it, but like the momentum of the passive machine keeps feeding this bubble. No one is looking at the price to earnings, or you're paying almost 10 times revenue, or whatever it is. They did 165 in revenue last year. The thing trades for $5 trillion. They do report earnings in 3 weeks' time. It should be interesting. But 207 on NVIDIA shares yesterday closed a high, pushed the stock market near that round number of 7,000 in S&P because of the weighing in the index. But it's not just the U.S. equity indexes at all-time high. If you go around the globe, is it really just as simple as the denominator, how we measure everything? Look at the stock market in Canada. I see the TSX is running a cool World Series ad of where the stock as market in Canada has come since 1993. When I first started trading stocks way back when the Blue Jays won the World Series. They're going to win another World Series here now this week. But look at this chart in the last 5 years. The TSX and Japan, the same thing. The Japan Nikkei rocketing to 51,000, up 38% this year. So it's not just NVIDIA. It's not just S&P 500. It's the Canadian stock market. It's Japanese stock market. It's all around the world. And it goes back to the whole theme of it. The denominator, the fiscal spending that drives everything is through that fiat instrument of money. It's just made up. Gold, 5,000-year money, truth serum to it all. Central banks continue to stack. While they have not stacked as much in 2025 year to date, Q3 was a big uptake, 220 tons of gold globally purchased by central banks, and year to date 634 tons, below recent highs. So that means to me there's still a lot more room to run. Physical demand breaks paper markets. All roads lead to devaluation, debasement of currency. From a note point stand out in my notes today, like I said, S&P 500 got a date with 7,000. Nice round number there if you want to use that. Uranium looks amazing still. It's been a rocket ship here the last couple of weeks. Copper looks great. Through the backdrop of all that, one play I like, go do your own research on it. Serial successful entrepreneur in the mining sector, Robert Freeland's Ivanhoe Mines in the DRC. That's a risk there, but they got a massive geological find and resource and mine. They just reported Q3 earnings. They got palladium, platinum, rhodium, nickel, copper, zinc, even some gold. Whatever the world's going to need for all this AI, all the data centers, all the debasement, all the inflation, all the devaluation tied up in one trade over the next 1 to 3 to 5 years. Ivanhoe Mines is worth putting on your watch list. Do your own due diligence there. Google looks pretty strong. NVIDIA could keep going a lot more. That's what I got for you today. Have a great day, and we will see you soon.